I'm Harriet Agbenyi. Thank you for joining me on the first edition of Business Morning for the week on Channels Television. Let's start the show with this report that broke about an hour ago. Nigeria's headline consumer inflation reaches 18.3% in October, higher by 0.83% from September level and worse by 0.48% over a year ago. A set of new data released today by the Statistics Office shows food sub-index higher to 17.1% by 0.48%, while all items less farm produce climbs 0.4% to 18.1%. The data shows inflation in urban centers worse by 0.81% last month to 15.3%, while inflation in rural areas also climbed to 13.3% by 0.84%. Contributing to the surge in headline consumer inflation last month were higher prices of food, energy and transportation. Today's October inflation comes just a week before the Central Bank's Monetary Policy Committee meets next week. That's on Monday and Tuesday. It is the last meeting of the Monetary Policy Committee for the year, and they will be deciding on interest rate direction for the final time this year. Well, we're going to chew over those numbers in a bit with Eromonsele Aziba of AfriInvest. He's an investment analyst with AfriInvest. We'll take a look at those numbers with him. But over the weekend, Channels Television, your #1 news channel, added another feather to its cap with a YouTube Creators Award for the best broadcaster in sub-Saharan Africa. The inaugural award was given to Channels Television in recognition of the content. That's my colleague there, Melinda Akilami, who was there live for that particular event. And she filed in this report. Now, Channels Television won this award for creating a YouTube channel for her diverse, numerous viewers. It's very easy to find us on YouTube. You can log on to youtube.com/channelsweb to catch up on all our programs and also view us live. It's a very user-friendly page. If you go there, you'll see. So we're still in a celebratory mood, and of course it comes as we're also celebrating 21 years of Channels Television. Don't forget to drop a very kind word for us and commend us if we're doing well, and also contribute to any of the subjects that we're talking about on our various platforms, the various programs that we air here for you on Channels Television. Now, the federal government appears not to be giving up on the $30 billion external loan request, as President Muhammadu Buhari's media advisor, Mr. Femi Additional, told Channels Television that the president hopes the loan plan will scale through to allow the federal government execute some of its infrastructure plans. Mr. Additional, who was on our political program Sunday Politics, also says the 2017 budget will be presented early enough to avert the scenario which was played out with the 2016 budget. Let's listen.
You'll notice that what the Senate said was that it needed more details about that bid for loan, and it was not that it rejected it completely. Now, if on the basis of that you do not represent, it does not show you as a serious government in the first place. This is not a flippant government, and before it asked for that kind of loan, it did its homework properly. And if the Senate says it needs more details, then more details will be provided and the bid will be represented.
A lot of people are wondering, when will the 2017 budget be presented to the National Assembly? And people are wondering, the same thing that happened to 2016 budget may happen to this 2017 budget.
But you also agree that we are recording better timing. It was to have come October 31, but it will come as soon as possible. This year, the budget was not signed till May. I don't envisage that you will have something like that for the 2017 budget.
President Muhammadu Buhari's media advisor, Mr. Femi Additional, on our political program, Sunday Politics, there with Shenwo Kimbaloyi, talking about the 2017 budget. Of course, we're coasting to the end of the year. This is November already. We're yet to see a 2017 budget. What is a fiscal spending plan for the federal government as the new year approaches? And a lot really needs to be done at this particular time, especially since the economy is not very favorable. It's biting very hard. And so the sooner we know what the budget is for 2017, the better for the economy and for Nigerians as a whole. Don't forget, it is what determines what is spent by the critical sectors of the economy, particularly now that we're focusing on key sectors of the economy that will revamp the nation as a whole. 720 billion naira, that's how much the federal government plans to pay debts owed the 36 states. This follows the undertaking signed by many states to rehabilitate ailing federal government infrastructure in their domain, especially road projects, with the understanding that they will be repaid by the government. According to the Speaker of the House of Representatives, Mr. Yakubu Dogara, each state will receive at least 20 billion naira from the money. And as part of efforts to enlighten bank customers and other consumers of financial services on their rights, a stakeholders meeting has been organized by the Nigeria Deposit Insurance Corporation for the business community in Kano, northwest Nigeria. Now, the managing director of the Nigeria Deposit Insurance Corporation, Omar Ibrahim, insists Nigeria is in dire need of positive attitudes to revamp the economy, in which customer protection will help promote financial stability in the country. Let's listen to this report.
It's a gathering that attracts businessmen, traders, government officials and other major players in the economy. The maiden edition of the Nigeria Deposit Insurance Corporation's Town Hall meeting conceived to address the concerns and expectations of depositors, especially small depositors who may lack or have limited capacity to fight for their rights in the complex financial system of modern banking.
For quite some time, the Bankers Committee, which comprises the NDIC, the Central Bank, and other stakeholders, have paid a lot of attention to the issue of financial literacy, to the issue of protection, of customers. And that is partly what informed this workshop.
A top official of the Central Bank of Nigeria says the Apex Bank has been working with the NDIC and other stakeholders in the effective mobilization of bank customers across the country. But lack of a sustained sensitization and enlightenment programs remain a major hindrance to the country's financial inclusion.
If you use POS, you are sure that there is no shortage in your money, because the exact money will hit your account. So the issue of somebody paying you with bank notes is out of it. And if I come and pay you cash, let's say 1 million, maybe there will be bank notes or shortages totaling 10,000, only 10,000. You remember, you have to pay somebody to count that money. You have to pay somebody to take that money to the bank. All these expenses are now off you.
Traders and many other members of the Kano business community raised various financial and business questions, while the regulatory authorities offered advices. While the NDIC promises to sustain the program on an annual basis, most people in this hall hope to see more of this gathering for a strong and effective financial system in the country.
And that indeed is very key. But let's take a look at what we should expect for this business week. It promises to be very busy, coming in, of course, to the end of November. Let's quickly take you through what we're expecting to see from the world of business this week. The CFA Society holds its conference on promoting regional investment in Africa by Africans in the nation's financial capital, Lagos, and that's happening tomorrow, Tuesday, November 15. Also on tap, the Nigerian Association of Petroleum Explorationists holds its week-long annual conference starting today. There's quite a lot to chew for them, especially with regards recent developments in Nigeria's oil and gas sector. We're hoping to talk to the president of the Association of Petroleum Engineers, holding their week-long annual conference and not explorationist. So we're hoping to get the president on the show to talk to us about what the focus is going to be for this conference. Also on tap, the Debt Management Office will on Wednesday, November 16, sell 95 billion naira. That's about $301.8 million worth of government bonds that are reopenings of previous issues. Using the Dutch auction system, the DMO will sell 35 billion naira of a bond maturing 18th of March 2036, 25 billion naira of the bond maturing January 2026, and 35 billion naira of the bond maturing in July 2021. Now, at its last auction, successful bids for the FGN bonds were allotted at marginal rates of 15.29, 15.47, and 15.48% respectively. Of course, results of the auction are expected to be released the following day. In the meantime, the federal government is looking for advisors and book runners to manage a planned $1 billion Eurobond sale before the end of this year. Of course, the Minister of Finance, Mrs. Kemi Adeosun, has talked so much about this. And so, of course, the market is actually waiting to see how this plays out with regards to the book runners. But let's quickly review the markets, taking a look, of course, at FGN bonds, how they traded on Friday. Most of the numbers we're going to be looking at are a little mixed, so we'll be taking a look at Friday trading and the weekly trading for the Nigerian Stock Exchange and NASDAQ OTC market. But let's start with the FMDQ OTC's market, and our focus now is on FGN bonds. Ahead of this week's bond auction, we saw quite an improved trading in FGN bonds at the FMDQ OTC's market. As you can see, their total number of deals came in at 109 as at the end of Friday's trading, and a value of 11.70 billion naira was recorded. But let's take a look at the top four most actively sought after FGN bonds. Yes, at the markets on Friday, it is the bonds, well, two of the bonds that will be offered at the DMO auction this week were particularly sought after by investors. The bond maturing on the 22nd of January 2026 had a price high of 85 naira 10 kobo, and the bond maturing on January 2019 had a price high of 102.75 with value of 2.80 billion at the end of the day. Take a look at the third most actively traded bond. We saw an activity of about 18 deals and a price high of 95.72 for the bond maturing on the 18th of March 2036. That had a price high of 80.60. For Treasury bills, also improved sentiments. The CBN is expected to hold a Treasury bills auction this week, and that has continued to improve investors' appetite for Treasury bills. We saw a total number of deals at 862 for Friday's trading session with a value of 218.50 billion naira. Taking a look at the top four of the 28 benchmark Treasury bills on the FMDQ OTC's market. These are the top four. The most actively traded was, of course, we see investors favoring short to medium dated bills, and the most favored was the bill maturing on the 23rd of March 2017 with a discount high of 17.55%. and value at 60.50 billion naira. While the fourth most actively traded was the bill maturing on the 15th of December 2016, and that had a discount high, of 14.80% with a value of 19.25 billion naira, and we saw that executed in 77 deals. Quickly now, let's turn our attention to the equities market, and starting with the Nigerian Stock Exchange, we saw heavy profit taking, pulling the all-share index down and the market capitalization down by 3%. The all-share index finished at 26,170.88, and the market capitalization at 9 trillion naira, volume at 2.847 billion as the week ended, valued at 7.42 billion naira, with deals executed in 16,065. All the sectoral indices actually finished in the red. Let's quickly take a look at that page and flip over to the NASDAQ OTC market, that's the market for unlisted securities, that index dropped 0.48% to close at 611.38 with a market capitalization of 413.74. The most actively traded for the week was Central Securities Clearing System with 148.32 million units. When we come back in just a bit, we'll take a look at our poll question for the week and, of course, review oil and gas stocks for the week just ended as well. Stay with us.